Hey guys, welcome back. Hope you all are doing well. In this video, we will talk about money and its type. Okay, so I hope so many times you guys heard about the concept of money. So here we will discuss the legal tender of money and the different type like fiat money or bank money, commodity money, or the legal definition of money, as well as the currency printing methods, and which is used by India, which is, I hope you know about the MRS system, which is known as minimum reserve system. Okay, we will start with the money. Okay, so the only request is please do like and do share this session so other can also watch, and if you're new to my channel, please do subscribe, right? So the first question is what is money? I hope you know about this one. So money is like anything which is a medium of exchange, so that is generally known as money. Okay, so like previously we have that barter system. So as the economies evolve, so now we have different formats like the currency notes or bank notes or this plastic money, which is like credit cards, debit cards and all. And we have e-wallets, so wallet money nowadays, which is very trending. Okay, so a thing like which is used for the medium of exchange, that is generally known as money. And we can say, if we talk about the legal definition, so anything which law says money, that is generally known as money. Okay, like in India, um, if you talk about the money, so RBI gave licensing, or RBI approved 2000 note as a part of money, or 50,000 50 rupees or 100 rupees, or they different denominations, or they different formats like wallet or cards and all. So these are generally, they have a legal tender, so they are generally called money. Okay, so money is anything which is generally accepted as a medium of exchange, measure of value, a store of value, and means for standard of deferred payment. So which is generally used for the payment methods. Okay, that is generally called money. So the term money is used to cover all things like coins, currency note, checks. So these are generally part of your money. Okay, so if you talk about the legal definition of money, so money is what law says is money. So law means the governing authority. Like in India, if you talk about, so we have two authorities. One is Government of India, which is liable for rupees one note and all the coins, number of coins. And the another one is, or the major one, which generally known as the custodian of the currencies, things and all. So which is RBI. Okay, so RBI, which is liable for rupees two note and above. So because they have, like, they approve that particular one as a money. Okay, so anything which is government declared as money is generally known as money. Okay, so on the idea of legal recognition, so there are two different types. One is legal tender, another one is non-legal tender. Okay, like here if you see, so these are the legal tender, so they are generally accepted, and we have some laws provisions. And if you talk about the cryptocurrencies, so in India cryptocurrency is illegal, so like these are not generally accepted. Okay, so that is generally part of non-legal tender. So we have legal tender of money, so like rupees 10 note, or the 50 rupees note, or 2000 rupees note. So these are generally approved by Government of India and RBI. And if you talk about the non-legal tender, so sometimes you also use Bitcoin or some other cryptocurrencies as a medium of exchange. So they have a non-legal, like we are using Bitcoin or any other cryptocurrency like Ethereum or Dogecoin or any other one. Okay, so they are also used for the medium of exchange in some businesses, but they do not have a legal tender. Okay, so that's why they are generally known as non-legal tender of money. Okay, we are using these things for medium of exchange, but our regulatory bodies, they are not approving that. Okay, so that's why non-legal tender. So legal tender, money which can be legally used to make payment of debt or other obligation in term of it is termed as a legal tender. And non-legal means it which generally accepted, but legally one is not bound to accept it. Let's say you have to accept some payments and the sender is using Bitcoin, so you can decline that one. But if he is using INR or UPI wallet or debit card, so that is a part of legal tender. Okay, so I hope now you are clear about this legal and non-legal things. Okay, so now if you talk about the different types of money, so we have different segments, or like you can categorize among different parts, like plastic money, we have wallet money, so that is very common to understand. Broadly you can say money is divided among three parts. One is commodity money, like when you use some commodity to exchange things like gold, silver, or anything else. Okay, fiat money, like when the value of that legal contract is lesser and the face value is higher. Okay, like let's say this rupees 2000 note, so the cost is around rupees 3.5. Okay, so to manufacture one currency note of 2000 rupees, it cost around 3.5 rupees to government of India or RBI. Okay, but the value or the face value of this paper is 2000 rupees, so that is generally known as fiat money. Okay, so all your currency notes and coins, they are generally comes under the fiat money. And bank money is like the credit creation is done by banks. Okay, so check is a promissory note or the bill of exchange. So these are the example of bank notes. Okay, demand drafts and all. So when apart from this debit credit cards and all, so or this bank note, currency note, we use some like some medium of exchange like check and all, so they generally comes under bank money. So commodity money is a good whose value serve as the value of money. Gold coin are the most appropriate example of the commodity money. So during the barter system, so this was the major the major we can say part of exchange, while we do exchange goods to goods, or we use then when came this barter system, we made some gold and silver coins. Okay, so these are generally part of commodity money. So we are using these coins, or we are using any specific commodity as a medium of exchange. Okay, fiat money is a good the value of which is less than the value it is represented as money. So as I gave you an example of 2000 rupees note, so the manufacturing cost of 2000 note is about 3.5 rupees. Okay, but the face value of that particular money is rupees 2000. Okay, so the actual value is lesser than, or the intrinsic value is only 3.5, but it representing the face value of 2000 rupees. Okay, so for example 10 rupees note in India issued by RBI is and is signed by the RBI governor, is guaranteed by RBI. So the manufacturing cost of that 10 rupees note is about 2.5 of 3 rupees, but the overall the value it is representing, it is 10 rupees, so which is mentioned on the face of that particular note, and it's a legal tender, so we are using that particular medium. Okay, so fiat money, so many times this is generally asked in examination, so please do remember this one. Okay, so all currency note and coins we use, so they generally comes under fiat money. And why they called fiat money? Because their actual price or their actual cost is very less, but they represent a high volume, or because these are part of they are generally approved by the legal authorities. Okay, so that's why they're generally known as fiat money. Okay, so with high face value, and intrinsic value is very less. Then bank money. What is bank money? So bank money consists of the book of credit that bank extend to their depositors. So transaction made using check drawn on deposit held at bank involve the bank money like demand draft, checkbooks, bill of exchange, or letter of credit. So these all are the example of bank money. Okay. So I hope now you get the basic differences or distinction among the commodity money or the bank money as well as fiat money. Okay. So still, if you have any doubt, please do mention in comments. Okay. And if you liking the concept, please do share with your friends and do subscribe my channel. Now, next thing we are going to talk about the method of note issue. So every country they use different method while they print the new currency in their economy. Okay, so like if you talk about the UK, it is the fixed fiduciary system that generally used by UK and even some other countries as well, European countries. The proportional reserve system is generally used by USA. So similarly in India, we have a minimum reserve system or which is also known as MRS. Okay, so now we will so the basic concept or the basic fundamental is whenever any country they issue some new currency in their economy, so they have to maintain some reserve. So the reserve can be in the form of gold or it can be in the form of cash or silver and all. So that is generally part of economic reserve. So the value that currency or the value of currency that generally depend on the reserve of that particular economy. So if they have a high reserve, so their value of currency will also goes up, and if their reserve are decreasing, so their value of currency will also goes down. Okay, so like if you study the purchasing power parity, so you will understand this particular concept. Okay, so in simple word, like whenever any central bank they issue new currency in the market, so against this new issuance they generally maintain some reserve. So to maintain that particular reserve we use different methods or ratios. So in India we have a minimum reserve system. Okay, so let's say if RBI will issue 200 rupees new 200 crore rupees new currency note, so against this 200 crore rupees they have to maintain some reserve. So the ratio is 115 is to 85. So 85 115 is to 85. We use this particular ratio for maintenance of this one. So let's say if you are issuing in any country, if they are issuing 200 crore rupees new currency note, and if they are maintaining 500 crore rupees reserve, which means they have surplus reserve, so the value of their currency will goes up, or the purchasing power of that particular country's currency will be at higher side. And if they are using like they are issuing 200 crore rupees currency and the reserve is only 50 crore, so their value will goes down, or the purchasing you will find a lesser purchasing power of that particular country's currency. Like sometime I hope you heard about the live example of Zimbabwe, Somalia, even Pakistan. So they are facing hyperinflation. That's because they issue a lot of money in their market. So they did credit creation, or the supply of money is at higher side as compared to their economic reserve. Okay. So as I told you, in India we use MRS, minimum reserve system, for the currency printing things in the country. Okay, so MRS is minimum reserve system. It's a like we have a defined case of 200 crore rupees. So it is not necessary कि whenever we'll issue a new currency in our market, so we'll issue 200 crore only. So this is a given case. Let's say, and given like this, I'm not giving this case like as my personal case. This is defined by the RBI or government of India. Okay, so 200 the case is if you issue 200 crore rupees new currency in Indian market in the form of note or coins, so you have to make a reserve for these 200 crore rupees in the ratio of 115 is to 85. 115 you have to make a reserve of gold and others which include cash, government securities, forex, foreign reserve and all, that is generally part of your others. Okay, so that means whenever RBI issue new currency note or new currency they print new currency in the market, so they make a reserve of 200 crore rupees, and that consists maximum part, that is generally we can say that generally included in the form of gold, and 85 is other, which can be like it can be government securities or debt to some other countries or the foreign currency and all. So let's say if government of India print 100 crore rupees new currency note, so this ratio will become just half. So 115 and like half of 115, 80, half of 85. Okay, if they print let's say 400 crore rupees, so this ratio will become double. Okay, so that totally depend on the demand and supply. So like what supply we have in the market and what is the actual demand for the money in our economy. So accordingly they take their decisions, and whenever they print new currency, so they generally use this particular ratio for the reserve management. Okay, so I hope you get what is the minimum reserve system and all. Okay, and this is very important one, so please try to remember this one. One another thing about currency, this I already taught you in with functions of RBI. I hope you remember. So whenever you talk about the currency printing in India, so we have two authorities. One is Government of India. So Government of India, which is liable for rupees 1 note and all the coins, number of coins like coin rupees 1, 2 or this 5, 10 rupees and all. And if you talk about the another one, so it is RBI, which is liable for rupees 2 note and above. Okay, so if you see the currency note of 10 rupees, you will find the signature of RBI governor. But in case of rupee 1 note, you will find the signature of finance secretary. Okay, so this is defined as per the act. So two authorities, and we do have two act as well. So for coins, it is Coinage Act 1906 or 2011, and for currency note, it is RBI Act 1934, and it is defined under section 22 of this particular act. So two act, so RBI Act 1934 section 22, which define like where we have the proper definition for the currency note printing. So this is generally used for the currency note, and the rupee 1 currency note printing right goes to Government of India, which is mentioned in this particular act or section as well. Okay, and as per this particular act, the maximum denomination currency note can be rupees 10,000. Please do remember this one. Okay, so during the first demonetization in 1946, we demonetized rupees 10,000 currency note. Even in 1978 demonetization as well. So where we demonetized rupees 1,000, 5,000 and 10,000 currency note. Okay, after that time period, we did not issue 5,000 and 10,000 currency note. So in recent demonetization in 2016, Government of India or RBI, they demonetized 1,000 and 500 rupees currency note. Okay, so all currency note in India are printed as in accordance with the RBI Act 1934, and the maximum denomination can be rupees 10,000. Coins, they are generally minted as per the Coinage Act 1906. Now it is called 2011 because in 2011 government they made certain changes. Okay, so they generally end up with the legal tender of a small coin. Small coin means rupee like coins less than rupee 1 denomination. Okay, so like previously we have 50 paisa, 25 paisa, 20 paisa, 5 paisa, 1 paisa. So government of India, they ended the legal tender of these all small coins. So that happened in 2011. So that's why we made some amendments in Coinage Act. And as per this Coinage Act, the maximum denomination of any coin can be rupees 1,000. So as for currency note, it can be a maximum denomination of 10,000, and as per the Coinage Act, it can be up to 1,000. Okay, so we have two act and we have two authorities, and the system we generally use for the currency printing, that is generally known as minimum reserve system. Okay, so I hope you get this particular thing. Basically this was a very basic video or introduction video about the currency or the money things. Okay, so what is money, what is the various types of money, or the currency printing methods and all. In our next video, we will talk about the money supply, which is again, I would say this is the most important or very, very important topic for the examination purpose. Okay, so here we will understand what is money supply and what basically part of money, like what is M1, what is M2 include, what is M3 include, what is M4 include, and the other part as well. Okay, so this will become very important for your examination purpose. Okay, so I hope you get this particular thing clearly. What is money and so money, which is generally used for the medium of exchange, and legal definition is what law says money, that is money. Okay, so like in India, law says 2000 rupees currency note is money, so because it is a legal tender. Okay, and it is part of fiat currency because their intrinsic value or their cost is very lesser as compared to their face value or the value they are generally carrying or they generally representing. Okay, so and the different types, like the commodity money, the fiat money, or the bank money, or even apart from that, you'll also find the plastic money is your debit card, credit cards, or e-money is like e-rupee, or these wallet system, they are generally part of your e-rupee. And like these are generally part of legal tenders, so IRB have some specific guidelines for these service providers, or even these particular nodes and all. Okay, so I hope you get this particular thing clearly. And in our next video, we will talk about the overall money supply in the economy. What is money supply, and what are the factors which generally which generally part of money supply, and what is M1, M2, M3, M4, and M5, M0 money. Okay, and guys, if you like the video, please do share with your friends, and please, if you are new to my channel, please do subscribe and do like these videos, and do mention in comment section if you have any recommendations, or if you want videos on any specific topic. Okay, so thank you for watching. Stay tuned. Have a nice day.